Hey everybody, it's Pete. Good morning. Welcome to a very exciting week in the stock market this week. We have a bunch of economic data that's coming out later in the week. We have earnings. We have some news from Tesla, Elon Musk taking a visit to China. The market liking that. Has Tesla bottomed out? But I think the biggest thing this week is Apple earnings and some technology earnings. All of that kind of pushing aside the fact that we have an FOMC meeting this week, which would have been a colossal news report any other week probably, but there's pretty much expected to do nothing. The big thing that we are facing in the market this week, and I want to be super clear about this, is the economic data that came out last week, battling it out right now with the technology stocks that kind of woke up out of nowhere, where Alphabet, Google, obviously, and Microsoft both reported closer expected revenue coming off of artificial intelligence. So those stocks kind of woke the market up. They woke up the semiconductor sector. There's a lot going on. We're actually got that one big critical price level that the S&P 500 is going to battle this week, and it is a must-watch level. I can't even say it any other way. The market actually last week had some weaker closes compared to the previous day, but closed near the high of the day. So I want to point that out to you because it's actually critical to kind of dive a little bit deeper into the charts. What I'd also like, if it's possible, let me know what you're trading this week. I always like to go back and forth a little bit on some opportunities. We had a couple of people last week in the middle of the week kind of asking about Meta and their earnings and whether or not Meta was going to actually bounce back as well. Meta did not really report earnings that were that horrible, but the expectations are so high for a lot of these technology stocks that that's really been the challenge heading into this earnings season. Is not that they were reporting bad numbers as much as the expectation was just so high it was going to actually be hard to meet. Now, Meta was a little bit different in the sense that there's a little bit of a challenge right there where the revenue numbers are actually okay. The guidance going forward was not perfect, and anything that's not perfect, the market just kind of slams down. So if we could actually take a quick look at that before we get started. The rally back to the gap, which is essentially up in this area right around 481, 485, is going to be challenging. The stock actually had a hard time for the previous 3 months heading into that. So if you happen to be trading Meta right now, I am not looking for anything better than maybe up towards that 480 level until the next earnings report. I think this stock is going to kind of drift sideways for a while. That's how I'm seeing it. But the big one that we need to keep an eye on here is this. This is actually a really interesting way that the market unfolded last week, where we kept closing positive, which actually is a good sign. Positive closes in any stock is good, because that shows that there's a kind of a saying on Wall Street that the retail public controls the open and institutions control the close. So in other words, there's all of our orders. We do all of our research at night, and as soon as the market opens, all of our orders go out to the market. And then 6.5 hours later, institutions kind of step in and they start doing what's called market on close orders. And that was actually really positive, that we saw 4 positive closes in the S&P last week. And the fact that Microsoft and Google reported. So we kind of got supported there. Now, the challenge is, was that pullback that we saw in the market the bottom? Did last week represent the bottom? Now, I'm going to make a pretty good argument right now for why I believe that the market has a greater chance of trading sideways than rallying up towards those highs or crashing down even further. I think that there's kind of so much, if you could picture like a tug of war, where there's so many things pulling against each other right now, that the odds of somebody having the dominant side of the market over the next quarter, that's actually what I'm talking about right now. I think that it's going to be challenging for the market to see a trend, but I think we're going to have some fascinating opportunities in sector-specific stuff. So what I mean by that is we dive over here and we start to take a look at, there's kind of a reversal now to the upside, where you can see that all of this red that was on the screen for 3 weeks is kind of out of the system right now. Now, basic materials, which was one of the strongest ones since the beginning, since the middle of February, that's kind of cooled off a little bit. But this is actually the thing that I want to really get across. What we do, what we kind of specialize in, is something called order flow stacking. And essentially what we do is we shadow the institutions as they move in and out of various sectors. Best case scenario, you can get a few months of sector rotation where we could identify it's moving kind of smoothly and we stay there and we just kind of beat up that one sector for a while and then we shift kind of into another one. And that's a beautiful visual there. If you want to take a screenshot of that, it's a really fun way to see. You could literally see the money in there working its way out and then working its way towards something else. If you kind of feel the stock market is overwhelming and you just kind of feel like everything is confusing, kind of simplify it down to the phrase of what am I looking for and is it there? That's kind of the easiest way to look at the stock market. So when we're going into every day, every week really is what we're looking for. We're kind of building up a thesis for the week. Just stick to that because it becomes a lot easier to say where are the pockets of opportunity I could take advantage of right now, especially important when the market is kind of at that level where we don't think it's going to rally and don't think it's going to sell off. And I'm going to walk you through why I think that's actually going to happen. So take a screenshot of this because I want you to have this heading into the week of where we see the opportunities. So you can actually see money kind of flowing out of basic materials. You can see that communication services, obviously from Google last week, perking up a little bit. We actually have consumer cyclical, some money. Look at how bad this was for a few weeks, perking up. And that's probably due to this guy right here, Elon Musk heading on over to China. And the stock is actually, last time I looked, it was actually up 7%. So we can actually take a look at that again. And yeah, it's actually up 10% now. So actually the market is really loving that trip for Elon Musk over to China. So we want to keep working our way through consumer defensive. We actually have a setup that I really like in consumer defensive. Now, this is actually an interesting one. Consumer defensive versus consumer cyclical. You can think about it as when you're thinking about like when you go out to yourself personally, when you go out to buy stuff, do you have a lot of extra money that you're going to spend on stuff that you really don't need, but maybe want? That's consumer cyclical. So those are really more discretionary things where you have extra money, you don't mind spending a little bit extra money, things are good. So maybe buying a Tesla, maybe spending some extra money on going out to dinner. So retail stocks or restaurant stocks, those kinds of things. Consumer defensive things are stuff you need to buy regardless of how the economy's doing and those kinds of things like Band-Aids and those kinds of things. So anyway, Philip Morris actually is in consumer defensive and actually had this rocket move to the upside and now is pulled back for a couple of days. So I'm actually looking for that stock to find those buyers again. So I actually just want to show you how I'm finding that here in consumer defensive. So if we take a look at Philip Morris, you can see the rocket ship that it had for a few days, basically for about a week or so, and now is pulled back for a couple of days. And what's kind of fun about this is we kind of pulled back right near this breakout level. So again, this is probably a little bit more of an aggressive trade because the stock only has basically a week and a half worth of stacked order flow. A really good visual of stacked order flow over time would be something like this in GM, which by the way, look at that chart. I can't even remember the last time I called out GM. That's a little bit more stacked order flow as opposed to just this week and a half. So there's actually a really nice lesson in there. When you're looking at stacked order flow and you're tracking how long it's been happening. So there's actually two definitions of stacked order flow. Oh, I should say two pieces to the argument. There's how long has order flow been stacked. So in other words, have they been buying for a day or have they been buying for a week or a couple of weeks or a couple of months? So let's use Simon as an example here. So let's say Simon owns a hedge fund and so does T. Brown. So they like something in particular. Let's say they like consumer defensive. So they start out buying and one particular day you start to see big green candlesticks and you start to see an increase in volume. And that's actually something that we track every day because we want to be ahead of this before the bigger move happens. So we actually kind of could work our way over here and you can see that we track accumulation days and distribution days. So these are the days here of stocks where hedge funds stepped up and some bigger volume came into the market at that particular moment. So that's kind of how stacked order flow starts. It starts with one big day of buying pressure, closing near the high, big green candles and elevated volume, well above the average volume. So if we actually take a look at a couple of those stocks, if we take a look at TER and we take a look at it in more than one way, we take a look at here and you can see where it is compared to the average. Now, a lot of people ask me what this line is here on the bottom. And basically what I'm looking at there is the moving average of the volume. And for me, it happens to be set at a 21-day period. So that's the first way of measuring it. The very first stacked order flow is the initial move, right? But then we have further order flow, where, as we just showed you in General Motors, it's happening over time. So there's two different ways of stacking the order flow. There's time and recognizing how much money was committed to that idea. So obviously, the more money that's committed to the idea, the more conviction I will have in that idea, because somebody with real money, real demand, is pushing that thing up and holding it there and continuing to do that. The second part of stacked order flow is taking into consideration the market. And if you can actually, I'm going to actually show you the newsletter. The way that we break down the newsletter is we look at the market, sector rotation, industry groups, and then we go into our individual stocks that we look at. So the first one is time, how long has order flow been stacked? And the second one is we go through what we call the power pyramid. So the bottom part is the market. We get a foundation under the market. Is the market obvious? And what does that mean for my conviction level? So if we kind of hop on over, that's kind of the theme for the what we're looking at this week right now, is the market is at this really big inflection point. You could actually say that we were neutral, although we were at all-time highs. We were neutral for roughly 3 weeks, sold off for 3 weeks, and now we're kind of sitting at this big level where most swing traders in the stock market use the 50-period moving average on the daily chart as a trend indicator to whether or not we want to be a buyer or a seller. Now, I use the simple moving average. I know some people use other ones like exponential and whatnot. I just use simple. So we have the 50-period moving average, and we also have this super simple downtrend line, and both of them are kind of converging right at that same place. So here's the battle that we have going on in the stock market this week. We have last week's economic data, and I just want to kind of bring that into, I want to bring that back into the equation. I want to talk about last week because it matters, okay? So if we go back to last week and we take a look at the data that came out last week, it was pretty important. We had PCE data come out last week. I'm not sure why it's not coming up here. Hang on, maybe I got the wrong dates. Oh, there you go, Friday. Thursday and Friday from last week. What's going on? It's not coming up. Anyway, last week's, I don't know why it's not coming up. Last week's economic data, we had GDP data, which represented the economy. And then we also had PCE data, which is representing inflation. And that's why it's such a big, important week this week. So obviously we have the Fed coming out this week, and there's a pretty much an expectation, a matter of fact, a very high expectation that the Fed's going to do nothing this week. And I promise you, I'm getting all the way to the point where I want to build an argument. I want to show how professional traders think through what kind of risk they're putting into the idea. That's really the big thing I want to get across right now, okay? So everybody, the probability is very high right now that the Fed's going to do nothing this week. And I want to explain why. The Fed is kind of stuck between a rock and a hard place right now, where it's almost like a broken promise, where they came into 2024 saying we're expected to cut interest rates 6 times this year. And as of right now, they haven't cut at all. And the reason they have been unable to cut is because inflation is what they're calling is sticky. It's not coming down to that 2% number right now. And the economy is remaining strong. So a strong economy and higher inflation that's not coming down, the only way that they could keep both of those things in check without inflation getting out of hand is to actually keep interest rates a little bit higher. And that's why they haven't been able to come down. So what we, ironically, and not necessarily good news, is if the economy cools off and inflation starts to come down, only then can the possibility of them lowering interest rates happen. But that's where it's kind of like a catch-22. We don't want the economy to cool off. We do want interest rates to come down, but we also want them to lower the interest. Excuse me. Oh my God. Maybe I need another cup of coffee. Hold on a second. We want the economy to cool off, but at the same time, that's not good, because that will be the reason that they cool off interest rates, right? How does that all tie together? Well, we have technology that woke up, but more importantly, we actually have more economic data this week that's going to add fuel to the fire. So here, gathering myself again here. If you can get inside my head, you'd have a headache. Trust me when I tell you. The Fed has mandates, and the mandates are to adjust basically interest rates up to compensate for the economy, for inflation, and for employment. Now, when employment, inflation, and the economy are all, a lot of people say hot, but when they're strong, interest rates will tend to stay high because that's the way that they kind of keep those things in check. So now on Friday of this week, let me get back to that. On Friday of this week, we have non-farm payrolls. This is a really big number. So basically, non-farm payrolls is the way that the Fed will take a look at how strong is the jobs market right now and whether or not that's a leading indicator for potentially the economy to slow down. If the jobs numbers stay strong, that means that we're all out to work and the economy is going to stay up there, which is why the expectation, again, for this week is the Fed doing nothing, right? That's a lot, right? So not only do we have the Fed, the jobs report coming out this week on top of last week's two reports, which came out on Thursday, GDP and PCE, right? All that means is the economy, inflation, and the jobs reports all coming out within a very short period of time. These are things that the Fed takes a look at, and they use those to determine whether or not they're going to raise or lower interest rates. Now, why is that so important? Well, we are smack dab in the middle of the busiest week for earnings. Now, think about this. Companies, earnings, borrowing money. If interest rates stay higher, that cost of borrowing money is going to be more expensive, which will lower profits. So we have higher interest rates. We have the Fed not going to do anything, and expectations are kind of through the roof based on the last couple of quarters, which makes it hard for them to hit those expectations. And we've started to see that. Meta is probably the best example of that, where Meta's numbers were okay, but they pulled back. In the other corner, kind of duking it out on the other side, is Microsoft and Google, both reporting good numbers and positive news about artificial intelligence. So if we kind of work our way over there, we have Google with this monster gap to the upside, and Microsoft actually doing pretty good, okay, after that as well. Not quite the same kind of gap, but definitely a bullish reversal in Microsoft. So what does all that mean, right? You're like, oh my gosh, you just gave me a headache. What does all that mean? I'm trying to get across to you that there are certain pockets of opportunity when the market is perfect. And we can get in there with a lot of conviction and say, I'm going to buy, and I'm going to buy more, and I'm going to hold longer, and everything is great. And we kind of had that for a period of, I don't know, gosh, probably around 20, 22 weeks in the market during this window of opportunity, right? You probably just felt like you couldn't do anything wrong. Your conviction level was kind of sky high through the roof. Well, the point that I want to get across, and I know that I might have just given you a headache, but that was almost intentional. There's a lot of things going on in the market right now, including this big 511 number that we keep looking at in the SPY right now, which is a big resistance level. Buyers have to punch it through that level. So what does that mean, right? What does that mean for the average person who's looking at the market right now and saying, what the heck do I do this week? So right now, there's a good chance we're going to be more sideways than up or down because of all of these conflicting news stories, all this conflicting important stuff where the economy is strong, interest rates are staying up there. Some companies are reporting good earnings, Google through the roof, Meta, big gap down. What does that mean for trading this week? That's the big thing I want to get across. So for trading this week for me, with all of this perfect storm of chaos, I guess is the only way to say it, we are not in that big rally anymore. And that means that I am personally lowering my risk per trade and more likely to be looking to take quicker profits until the market has better directional bias. There's no other way for me to put it. Now, we have the couple of companies in artificial intelligence that have already reported. We actually have AMD reporting this week as well. So we can kind of take a look at and furthering the conversation around artificial intelligence. This stock has been beaten up pretty good. This is roughly, let's say, 226 down to 146. That's an $80 move to the downside. Now, what's interesting about this is you can clearly see we broke that downtrend with earnings scheduled to be reported Tuesday after the close. So we're kind of now building the argument, has artificial intelligence kind of went into hibernation for a couple of weeks, and now are there going to be better stories from somebody other than NVIDIA right now, and we start to see a new rally? But even if that happens, we still have this big significant number, this big significant level in the 50-period moving average. So I just want to be clear about this. And this is something we spend a massive amount of time talking about in our private coaching community, is you need to learn to recognize when to step on the gas and when you're in kind of stop and go traffic, or when you should pull over and have a coffee and go to the diner. That is the missing secret key ingredient. I know everybody uses the word secret in the markets, oh, I got the stock market secret. The stock market secret is understanding how to adjust the amount that you are willing to risk based on market conditions. And again, I always bring it back to driving because I just think it's the easiest way to understand. Sometimes it calls for stepping on the gas because nobody's on the road with you and it's blue skies and you can go, right? Everybody understands that. But then there's other situations where you're kind of like this, where you're going in that direction, but you're not quite, it's not so much stepping on the gas anymore, and you're keeping yourself safe because that's the right thing to do at that moment. That's the kind of market conditions we're going to have this week. I just can't express it any stronger. So the big picture, with all of this stuff going back and forth, we're more likely to go sideways, which means for us to find some opportunities without having that big picture of the market on the same side, that just means we have to do about 5 or 10 minutes extra work to find individual stock-specific ideas and sector-specific ideas. So now we kind of work our way up that pyramid where the bottom is the market, just above that are sectors, just above that are industry groups, and then just above that are the individual stocks. So that's how I'm actually mapping out this week. So basically how we're doing that is we are working our way through the research, and that research always starts out with looking at sector rotation and look at how good the market came back last week. So we're going to be looking at communication services this week. We're going to be looking at consumer cyclical, and obviously Tesla is a big part of that, and technology. So that's actually where my first attention is going to end up being this week, in those particular individual sectors. And then within those sectors, I kind of work my way up into industry groups, which is actually how we start to break this down here. And you can see that semiconductors, as we just talked about, are getting a lot of attention. And actually, I want to point out this one over here, actually two of them, SMTC and TXN. I want to give you both of those charts this week. So AMD looks like it's bottoming out. We just need to see a little bit of follow through, which we're actually getting here this morning. But SMTC, you can see actually a pretty nice move last week. But TXN, right at the cusp. Now, this is an interesting one because we actually had earnings report over here, and this, which was after hours, and then the next day the stock gapped up. Now, this is, how we talked about before, where like the market can seem like it's kind of chaotic or actually random. Random is probably the better word for it. What's really going on right now is this stock, TXN, had a massive move up after reporting earnings, but then kind of pulled back a little bit, and now it's kind of drifting. So what I want you to realize is, I'm sure you've heard of the word tape reading, right? Well, tape reading basically means is if we have a price, we're basically measuring, is it closer to or further away from that price? Now, you know how to read the tape. It's kind of like this confusing thing that, people are like, oh my gosh, when you're in a trade, you're reading the tape. When you bought a stock, you know better if it's moving away from that price. Professional traders read the tape before getting in the trade so that they can increase or decrease their conviction in an idea. So if we take TXN, it gapped up all the way up here after earnings and traded down, and now it's kind of dancing around, but now we still have that level. That's the level we're going to read the tape in TXN. So when we take a look at that chart, you can actually see that we got pretty darn close right back to the price of the earnings gap. So this price right now, which is 178.23, and you can see we're just below that right now, that's the level. So if you were trading with me right now, we would have an alert set for 178.23, and probably a little bit below that because we want to know it gets back to that level and then we don't want to be late, so we'd probably have it at 178. So if it trades up to 178, the alert goes off, and now we make a decision that buyers step back up from that big gap that they had, and now they're buying again. That's kind of like the follow-up on order flow stacking, where the first sign was that big gap up, and now they're coming back and looking to establish new buying pressure. So I want to give you insights into how to manage this week. So we started out with those 3 sectors, and now we broke those sectors down to industry groups. And then from there, we went and find some easier opportunities to trade. And I just gave you 2, SMTC and TXN. SMTC has gone up a little bit over the last 5 days. I'd probably be a little bit more inclined. Now, here's the part that everybody on YouTube misses. I said I need for it to get above that level in order for me to consider looking for a new opportunity. I did not say I'm looking to buy it today. I still need price action to get back above that level to validate that buyers came back. So I just want to be clear about that, because every once in a while we get people say, oh, 3 months ago you missed it, you were wrong on that trade. But it never triggered, so I'm not in the trade to be wrong. Do I have losses? You bet you bottom dollar I have losses. All losses are a business expense. Anybody who tells you they don't have losses, they're full of beans, or they're cutting their profit short as soon as they show a gain on that. So just keep that in mind too. Losses in trading are business expenses, and the sooner you acknowledge that, it becomes a billion times easier to accept that loss and then just go to the next trade. I have losses all the time. It's not the losses that matter. If you kick those losses out and keep them reasonable, the only skill that is holding you back from seeing consistent gains is actually understanding how to hold the winners longer. And here's the ironic part. You probably have massive discipline on your stop loss. You need to have that same massive discipline on your winners. The problem on the winners is most people, as soon as they have a gain, they want to take it off the table, and they're cutting their profits short. You need to have a structure, which our structure is the profit maximizer, that tells you how to hold those winning trades. That's really the key. So we talked about a lot today. So basically what I'm looking at this week is non-farm payrolls are coming out on Friday. And I'll just show you that one more time, which is on the end of the week. And this is a really big number. Now, normally the FOMC, this would be normally a monster thing to be kind of trading around until that announcement happens. But because the probabilities are so high that nothing is going to happen this week, we're kind of like going beyond that and looking at what would interact with the market in a big, meaningful way this week. There's obviously the earnings reports. We have Apple this week, AMD this week, and Amazon as well. All 3 of those stocks are reporting this week. This is easily the busiest week of earnings season. So we're going to have earnings season catalyst. So what does that mean? I want to keep recapping this because I want you to head into the week and have a game plan. The way the market's unfolding right now, we had a deep pullback and big resistance ahead. So I think the market itself is going to be more likely sideways, which means that we need to go up one level to look at sector-specific opportunities. And actually, Billy's asking about commodities right now. Copper is actually still pretty strong. Copper made two-year multi-year highs, I think, this week as well. Gold is still strong. AEM, we're starting to see mergers and acquisitions in commodities. But how about cocoa? Oh my gosh, have you seen what cocoa has done? I don't want to get too far off track, but I do. Commodities are actually what I first started trading kind of way back in the day. Look at the cocoa futures. Cocoa has been on fire. It might be topping out a little bit here, but that's actually where we're at right now. So anyway, I want to give you the game plan for the week. I want to give you like my thought process for the week. The market likely sideways with all of these different things kind of like duking it out, including Microsoft and Google, which was pretty good. I think the better opportunities for this week, and this is what I'm going to be looking for, I know, is earnings-related opportunities, very similar to what I showed you in TXN before. Also, Tom is pointing out NEM, which actually, thank you for pointing that out, Tom. It actually had a really good move last week. That kind of was a really nice explosion. So you can actually, earnings came out. If you're not trading NEM, we've also been watching AEM, which had a pretty good move as well. NEM actually had a bigger move, but AEM is actually in merger talks or possibility of merger talks with somebody else. That's a whole other conversation. So take a screenshot of this so you can actually see where the pockets of opportunities are. And we can actually kind of break that down as well by sector. You can actually see technology woke up a little bit. There's some industrial opportunities in here as well. ETN is sitting right at a breakout level. Keep that on your radar this week too. If we kind of work our way now over to the sectors, so once we go through the sector rotation, then we want to have a list of stocks in individual sectors. Alcoa is actually interesting. It's still kind of just hanging out in front of that resistance level right here around 38. It's been having a hard time getting through 38. We can actually see it's got a lot of room to go through 38, maybe some resistance opening after that till up to 55. So again, when a stock has that much resistance and challenging to get through there, I like the idea, but I've been lowering my initial position size with plans to add into that position. So anyway, let's continue to go through some of the ideas and what we're looking at for the week. So we talked about basic materials, communication services. We talked about Google, Omnicom, actually, OMC, not a stock that I've done a heck of a lot of trading on, but look at this level that it's kind of hanging out here. How do you not want to pay attention to that one? And basically, we got to get through this 96, 97 level. So that's also going to be on my radar this week. Continuing to work our way down, consumer cyclical, as we talked about before. Tesla, obviously, consumer cyclical. Talked about earnings ideas, right? How about Hasbro? When's the last time you traded Hasbro? And look at that gap and look at how the stock has paused and look at the opportunity, another $10 till the next level. So Hasbro will also be on my radar. So you actually kind of see how we're working around the market, which is probably going to be challenging this week with that big resistance ahead. We're going into sectors and we're going into earnings. So basically what I want to say here is this is a treasure hunt. You know, a lot of people are like, I don't have time to do this. Well, I love doing it because I'm going on a treasure hunt every day. When you spend that extra 10 minutes, 15 minutes, or you get my research, which is another way of doing it, I'm basically drilling down to say, here's the opportunities right now. And I don't see it as extra work. I see it as I'm going on a hunt for money. And when you start to see it that way, you know what? Everybody who says they don't have time, you put that on your calendar. You make that time on your iPhone and you're like, okay, every day at this time, I'm going to spend 15 minutes and I'm going on a treasure hunt. That's when trading becomes really fun. All right. Okay, so let's keep working through the sector stuff for the week. So consumer defensive, we actually talked about PM there. Estee Lauder actually at a breakout level this week as well. EQT, Hess, and Chevron. Now, what's interesting about these guys is most of them are actually in the same industry group where there's a little bit more buying pressure in that industry group. So if we take a look at EQT, and again, this is kind of leveling up the argument by basically looking at other stocks. Oil and gas, E&P, actually have quite a few stocks that are looking pretty good right now. So I actually want to work our way over there. And let me actually open this up. I just want to really point out and show you what it looks like when you're building out this argument. So we have oil and gas, E&P. And if we kind of break down those charts, you can actually see that there are quite a few stocks in this industry group that are showing relative strength. So basically what I want to show you here is this, and this is kind of where we want to finish up today. What we're essentially doing is we are working our way up here. So one of the ways of stacking order flow, the first thing we do is we look at the market. Is the market obvious? And we can kind of say the market's kind of deeper pullback sideways with big resistance above. So we had a rally last week, but we still got a lot of work to do. So that's kind of neutral at best right now. Working our way up to sector rotation, well, that's kind of what we're working our way through now, is we're trying to find some ideas within the context of sectors. So again, I just want to give you, what's the word I'm looking for? Direction. That's probably the best way to put it. So you start over here with what sectors are interesting, and then you start to work your way into industry groups. So sectors in the direction of the market. If the market's neutral, you give more emphasis to the sectors. Once the sectors are interesting, then you go and look for industry groups, which is actually what we just did with oil and gas, E&P. So now we broke down and we have all of these ideas as potential ideas for this week. And then after we find the industry groups that are interesting, then we get into stock picks. And that's basically the process that I think is one of the easiest ones to follow, because you have a structure. And the most important part is we are building an argument for how much we want to put into the deal. If you learn nothing else from watching videos on YouTube, especially stock-specific videos on YouTube, learn this, that the traders who last a long time and sleep well at night adjust the risk they're willing to take based on how much the market is obvious. So when you start to do, and if you want to take a screenshot of this, you could take a screenshot. When you start to map things out in this way, the market is no longer random. What you are essentially looking for now is saying, that's what I want to see. I want to see an obvious market. Is it? Yes or no? Then you move up to the next stage. I want to see obvious sectors. Best case scenario, they're in the same direction as the market. And then you kind of work your way up that list. The more of the pyramid you have on your side, the more you put into the pyramid on that argument, obvious market, obvious sector, obvious industry, obvious stock, the greater conviction. And that's when I could increase my initial position size and probably have a bigger target. This week, I'm a little bit lower because the market's neutral. We found some sectors, we found some industry groups, but we have that big overhead resistance. So for me this week, I'm trading a little bit more for cash flow, a little bit less initial position size, a little bit more aggressive that when we have profits, I'm going to trail those profits higher a little more aggressively until the market kind of becomes a little more obvious. I know there's a lot to unpack here, right? But what does it basically mean? We're in stop and go traffic right now in the big picture, and we're looking for the specific highway to open up a little bit, which is sector rotation. So I'm going to pull that up one more time just so you can take a screenshot of it because I think it's kind of important. So if we take a look over here, we already know that we are looking at, in the group, oil and gas, E&P, but the sector-specific stuff is here. And if you want to get a little bit more of a detailed picture of that, you're going to look here. And what's interesting here, and these are the metrics that I run for the community every day, you want to see if they are increasing or decreasing in a way that matters. So healthcare has actually gone from negative to consistently positive numbers right now. Real estate has gotten a little bit strong, and technology has woken up a little bit here as well. So we're kind of tiptoeing into the week, confident in some of the earnings catalysts, confident in some of the sector and industry group specific plays, waiting for that big picture of the market to kind of unfold in a way that will increase our conviction in a little bit different way. So that's how I'm mapping out the week. Friday is the big day for economic data. We got earnings chopping up throughout the week as well. Super, super busy week of earnings. If you happen to be on the day trading side of things, there's plenty of day trading opportunities coming off of these catalysts from earnings especially. All right. Thank you so much for being here this week. If we did a good job this week, please do me a favor. Make sure you hit that subscribe button. It would mean the world to me. Plus, it lets me know that this is the kind of stuff that you like listening to. If you have any follow-up questions, I would love to see those in the comments below, and I'll always get back to you as soon as I can. All right? Let's make it an amazing, amazing week of trading. Put it in your hands. Recognize what kind of conditions we have, and go get them. All right? Have a great day, everybody. I'll speak to you soon.